Hey, this is Raghi, and in tonight's Trade Forex Futures free video, we're going to talk about some of the positions that I've got and some of the questions that I've received this week. And a lot of them are coming from traders who are interested in some of the markets that are related back to the Forex market, the futures markets that are related back to the Forex markets. For example, this dollar index. I've been talking about some of what I call the Forextra in the morning chat, and I know a lot of you have been catching me in some of the other free videos that I've done on my YouTube channel and at the blog here. And you'll notice that I have a number of futures contracts that I watch on a regular basis and actually trade. So I'm going to walk you through some of those recent trades, and the one that I've done now for the fourth time in a row is the 94.25 to 94.95 swing buy on the dollar index. Now, this is becoming successively a little less appealing to take despite today's move to the upside, because a 94.25 buy with a ceiling at about 95, the old ceiling, became an issue because the risk-reward ratio is getting slowly more lopsided to the side of risk. But the move today busts that 95 ceiling. So while I wasn't as happy with the last couple 94.25 buys, today I'm really happy because not only do I get my follow through and another 75 tick trade winner out of this thing, I've busted through the ceiling. So next time I buy 94.25 or even say 94.10, I know that I could reach through 95 for a potential profit target. So we're going to keep this swing buy alive and well. Another trade that's been a little bit more advanced, a little bit more tricky, has been the bearish play in crude. Now, back when this was the March contract, I was fading this contract as well, and now that it's the April, it rolled over, and I'm still a bear. In fact, this was a fade short. In other words, I was looking for an overbought short sell in the area between 53.95 and 54.20. And that is where I would deem this sideways choppy market at the bottom of a downtrend overbought. In other words, I shorted here. And I'm profiting as the market sinks towards not only the 49.20 optional profit target, but I'm actually getting very close to my non-negotiable profit target at 47.80. In fact, that was today's low. That was today's low. So finally reaching that target where support would be waiting just below the 48 level down to 47.80, and that's a minor psych level. So this might be a little different than what you know me to do, which is a lot of that trend following. But this really is related to the trend follow, because after we get a sell-off, one of the things I like to remember is respect the trend that was, and that's what we're doing here. So these are some of the more Forex related futures. And why is crude oil so important? Well, that takes us back to a trade that I've been playing for a while, which is a US dollar Canadian dollar to the upside, buying US dollars, selling Canadian. And this trade benefits from not only that strong US dollar that I was showing you, but it also benefits from weaker crude oil. Now, that's not the sum total of what moves this market, but we know that the data out of Canada has been mixed. We actually had some good data today, but I also know this is also a central bank that just finished cutting rates. So there's a certain dovishness coming out of that central bank. Now, the thing to remember here is I'm definitely relying as much on the strength of the dollar as I am in many ways the weakness of the Canadian dollar. Strength of the US dollar, weakness in the Canada. Now, this is the second time we've taken a trade here. The first trade we took on the 13th, rode a 24.55 buy to 25.65 for a nice 110 pip winner. Now what I'm looking to do is what I call refire that same trade. So we have another 24.55 on the books. So one of the questions I get is, Raghi, I know you trade longer term time frames, but how often do we get trades? Well, let me show you here. We actually have 3 trades that have just triggered within the last couple days. Here, the 25th and the 26th, and those are 3 different positions. One in the pound Aussie, another in the dollar Canada, which I was just showing you. This will be the second time because the previous trade I've already taken a profit on and closed it out. And then the last one is the pound versus the Canada. And the thing that you'll notice that these trades have in common is the strength in the pound or the US dollar being played against the weakness in the Canadian dollar or the Australian dollar. And both those central banks have just finished cutting rates. Okay. Now, the other thing to remember in terms of these three trades is that this one right here, the 2-lot pound Aussie, this pound Aussie trade was triggered on the 25th. The other thing to remember is every one of these had about a day, if not more, to get the trade set up and then wait for the entry to come to us. In other words, there was decent shelf life. I don't like trades where, unless you're with me in the morning, you can't get it. I don't like trades that have to be taken live with me. I like trades that I can set up in the morning between 8 and 10 a.m. Eastern, put it on the spreadsheet that all members have access to, and then they're able to take a look at the trade, take a look at the corresponding chart of the day or the videos that I've explained the setup in, and then go ahead and put the trade on with a little bit of, thought and some time to prepare. And that's why shelf life and these daily time frames are so important to me, because ultimately what is, my job is to make sure that once I set up a trade, you can set it up too. And I realize not everybody has the time to be with me between 8 and 10 every morning. So it's imperative that while I do a lot of that analysis during those hours of the day, if you were to tune into the spreadsheet, pull that up in the members area anytime after 10 o'clock, with a lot of certainty the details of what I'm taking. So these are some of the recent trades we've taken, and I've already taken a 2 lot, a lot more than 2 pips. I've taken a 2-lot winner out of that overall 4-lot trade in the pound Aussie. I bought at 96.25 and I took my first profit at 97.30. That's 105 pips across 2 pairs. Now here's the lesson in terms of once you take a profit off the table, that these remaining 2 lots are at what I call a break-even stop loss. In other words, they're not exactly break even. I'm actually risking 10 pips per remaining lot so that I can use a 96.15 stop loss. So one of the things I mention a lot in the morning chat is show me your stop and I'll show you your P&L. And that means that if I were still to have my initial stop loss in the pound Aussie, that means that after realizing a profit of that 105 pips at the 97.30 level, I could still have a stop way down lower. And that would represent not only giving back a whole bunch of unrealized profit, but then actually chipping into my capital. Fortune cookie trading wisdom, and I call it that because we hear about these things, but not a lot of detail on how to do it strategically and consistently. And that means that once I take the 97.30, this trade is a winner. I must realize a small profit, and I ratchet my what I call point of validity stop to a break even so I can limit any downside risk. And that's what I'm sharing with you here. This is really just a basic idea of some of the risk and trade management that I share in the chat room, and there's a perfect example, a current trade, actually 3 of them that we've taken, set up in the chat room. And again, I want to emphasize every one of these trades had shelf life. Dollar Canada and pound Aussie, 2 full days really before the trigger. And then the pound versus Canadian dollar, that had a whole day. So it's very important to me that you have the time to look at these trades and set them up on your own timetable, on your own schedule, because the 24-hour Forex market, it can be a beast, sure, but I think you can tame that beast by remembering when are those active times to do the analysis, and then also remember, let price action come to you. And that's a lot of what we do. All right, so with that being said, thanks for joining me for this free video. I know I got into some details about some recent trades that you may or may not be in, but I wanted to give you some insight also into how we operate here at TFF, and also how to manage not just some of these winners, but some of your winners as well. So ask yourself, what's your first profit target? And upon hitting it, besides realizing a profit, what else do you do? How do you protect your capital? How do you ratchet from protecting your capital from loss and only risking house money? Only risking unrealized profit. Because at that point, you really are protecting your capital and locking in profits. Again, show me your stop loss and I'll show you your P&L. All right, have a great evening. I'll see you in the next video.